Markets were rattled by nearly $900 million in liquidations over the past 24 hours, driven by a Bitcoin flash crash that briefly pushed prices below $111,000 after a whale sold 24,000 BTC into thin liquidity. While this triggered over $550 million in long position wipeouts, Ethereum proved more resilient, buoyed by strong institutional flows and a narrative shift toward its expanding role in the digital asset ecosystem. The divergence between Bitcoin's fragility and Ethereum's strength underscores how capital allocation is beginning to realign across the top Layer 1 assets. Institutional momentum is clearest in Ethereum ETFs, which have now absorbed $12 billion in inflows this month, including $287 million in a single day. This surge contrasts sharply with $1,750 million in outflows from Bitcoin ETFs over the past week, suggesting asset managers are repositioning toward yield, programmability, and regulatory momentum around Ethereum. Simultaneously, Ripple's decisive legal win against the SEC has propelled XRP back into the institutional spotlight, with new spot ETF filings from 6 managers, including Franklin Templeton, signaling the next battleground for mainstream adoption. Stablecoins, meanwhile, have surpassed Germany in U.S. Treasury holdings, cementing their role as an increasingly systemic component of global liquidity. At the structural level, these shifts highlight a market maturing under pressure. Japan's Financial Services Agency is advancing crypto tax reforms that could fast-track ETF listings, while Wyoming's launch of the first state-issued stablecoin establishes a new regulatory blueprint. Corporate adoption continues apace. Japanese firms led by Metaplanet are stacking Bitcoin, while Capital Group quietly acquired 11 million shares of Metaplanet itself. Layer 1 expansions like AAVE's deployment on Aptos, paired with altcoin market capitalization nearing $1.1 trillion, point to a new cycle of diversification. Taken together, the data suggest an evolving market where institutional rails, regulatory clarity, and sovereign-level stablecoin initiatives are converging into a more durable framework, one that may ultimately accelerate the mainstreaming of digital assets.